Hello everybody, welcome to another episode of Erickson TV. Curtis here with Lauren. Hello Lauren.
Hey everybody.
Hey Lauren, since the presidential election has ended,
Yay!
thankfully, and now we're hearing in the media this big concern about the end of December 31st, 2012, what they were calling the fiscal cliff.
Right.
Where there's a combination of automatic expiration of tax law back to 2001 levels and also automatic budget cuts, a significant amount
right.
to the defense. And what the thing is I'm hearing some client concerns. Should we, change our portfolio because of this impending fiscal cliff, and should we do something different? And the thing is I think you and I would agree that is something that really is out of our control,
right.
at the federal level. But from a personal level, there's some things that people can do behaviorally to make sure that they do not have their own personal fiscal cliff.
Right.
What do you think some of those things, suggestions would be?
The first thing that just immediately comes to mind is don't try to change your portfolio based on what you can predict about what politicians are going to do. You can't predict anything that politicians are going to do, and even if you could predict what politicians are going to do, it might not do you any good in terms of investments, because you'd have to be able to predict it before everybody else predicts it.
Right.
So that would be the first thing I would mention. I think the second thing to avoid your own personal fiscal cliff is, realistically, what got us to a fiscal cliff? Debt.
Right.
And I think that, the best thing that a whole lot of people can do to avoid their own personal fiscal cliff is deal with debt, deal reasonably with debt, pay off your debts if you have them, and don't go into too much debt if you don't have a lot of debt. And then I think the final thing is, when you invest, especially if you're really worried about a fiscal cliff, why would you want to put all of your money into government bonds or other bonds that are based on government bonds? Because unfortunately, for people who are concerned about the political fiscal cliff, that seems to be one of the first things they want to do.
Right.
Put all their money into extremely low returning,
right.
guaranteed negative real return asset classes.
Right.
That seems like a bad idea.
And I think to end this video, when we work with our individual clients and their portfolios, we purposely start out with a very globally diversified
right.
portfolio. And then number two, there's the one thing that I love about our recommended strategy is rebalancing. That empowers right. people to avoid their own fiscal cliff, because it does one thing. If we do have our inevitable ups and downs in the stock market like we
right.
always do, it doesn't matter really what is causing it. Rebalancing is an opportunity to empower individual investors to buy things as they go lower.
Right.
And then as it inevitably comes back up, we sell things, some things at the top when they're higher. So that's the way a person can take care of their own fiscal cliff. And we're doing that for our clients. If you're not one of our clients and you want to make sure that you're not going to experience your own fiscal cliff, please get a hold of Curtis or Lauren, and we'll be happy to help you. Thank you very much for watching this episode of Erickson TV, and we'll see you next time. Bye now.
See you next time.